Banking Theory, Law and Practices, Unit 2. In Unit 2 of this subject, we will be seeing the following topics: opening of account, special types of customers, types of deposit, bank passbook, collection of banker and banker's layer. In this class, we will discuss about opening of an account. Opening of an account. General procedures for opening, saving, current, fixed and recurring accounts are given below. We will discuss that uh, in detail. First is a saving account. The main purpose of saving account is encouraging the savings of households. Okay, the government want people to have some saving. Okay, so that it will be very useful during the time of financial crisis, or sometimes they have a sudden expenses, something like that. The main features of saving account are restriction on withdrawals. In the interest of the objective of saving bank account, the bank levies certain limitations on the right of the depositor to withdraw the money within a given period. So this is to protect the interest of the customers. They have, the bank has a policy that they have a restriction that the customer can withdraw only a certain amount for a particular day, okay, or a particular given period. The number of withdrawals over a period of 6 months is limited to 50. So in a month, customer can only withdraw up to like 50 withdrawals. Minimum amount to withdraw by the withdrawal is one, and that from a check is five. So a minimum withdrawal one. Now maybe you cannot withdraw now ₹1, and now it is like a minimum like 50 rupees. Okay, and opening of account, we discussing about saving account. uh, Restriction on deposits. The banks do not accept checks or other official documents payable to a third party for the purpose of deposit in a saving account. So the bank don't accept the checks, okay, other official document payable to a third party. That's the way the customer is paying to the third party. This is for the purpose of saving account. Only this type of facility is available usually in the current account. So minimum balance, customer has to maintain a minimum balance in the bank. Again, it depends from a private bank to a public bank. Usually the minimum balance to be maintained in a public banks is comparatively low when compared to the private banks. There is a minimum balance that needs to be maintained in SB account as prescribed by the bank, and specific charges are levied if the minimum balance is not maintained. If the customer failed to maintain, that is, he has withdrawn the amount more than the minimum balance, or then the minimum balance is less, then what happens? The bank will deduct some charges for not maintaining the minimum balance. Payment of interest. The rate of interest payable by the bank on deposits maintained in saving account is prescribed by RBI. Interest is computed at quarterly or longer rest of periods. So what happens for the money the customer have in their account? The bank will pay some interest. Actually, this interest is lesser than the deposits, like a fixed or recurring deposit, but still they pay somewhere around 4 to 5% depending upon banks. So this percentage of interest is monitored by RBI, that is the Reserve Bank of India, which is a central bank in our country. So the interest is usually paid in a quarterly, like every 3 months they pay the interest depending upon the amount which is in the customer account, customer saving account. Check facilities provide to the deposit only when they keep the minimum balance with the bank according to its rules. Only check payable to the customer having SB account are collected. So what happens, check facility is usually they don't go immediately. I mean, provided how much money they are having in the account, and then the kind of transaction the customer is having. So depending upon, they will get the check, and then the check is usually for the SB account. So opening of account, saving account, prohibition on saving account. What are the things they should not do in the saving account? The RBI has forbade the banks to open a saving account in the name of trading or businesses. In other words, the Reserve Bank of India don't allow the banks to have a saving account or SB account in the name of business. So if you are having a business, they are not entitled to open a saving account, but they have to open a current account. A company or an association, when someone going for partnership or something, so they cannot have a saving account. Government departments, they cannot have a saving account. Bodies depending upon budgetary allocations for performance of their functions, any entities or business, okay, cannot have. Municipal corporations, okay, so these are the what is say entities cannot have a saving account in the bank, and this is being monitored and implemented by Reserve Bank of India. Then we go to the second type of account, which is a current account. An account which can be operated any number of times on a working day without any restriction on the number, and the amount of withdrawal is known as a current account. Basically, this current account, the main facility is that number of withdrawals is not limited, like unlike like saving account. So here they can withdraw several times for a particular time, so there is no restriction on number of withdrawals, as the bank is under the responsibility to repay these deposits on demand. They are called deemed deposits, because they will withdraw any amount at any point of time and any number of times. So what happens, bank has the responsibility to pay back the deposit. So what happened, the other name is also called deemed deposits for the current account holders. Current account suits the requirements of joint stock companies, public authorities, corporations, etc. So, unlike a saving account, here joint stock companies, public authorities, corporation, governments. So, these kind of entities or business, they can have a current account, and their banking transactions can happen several times even per day. So, check facility is available for the investors. So, easily it's available, unlike some restrictions in saving bank. Here what happens, the check facility is given easily because it's a business one. So business transaction usually occur through check, so the check facility is given for the current account. A current account carries certain privileges which are not available to other account holder. Third-party checks and checks with endorsements may be deposited in current account for collection and credit. So what happens? We can even deposit the checks given by a third party in our account. So this is collected by our bank. So here the bank act as a collecting agent. So this is facility is not on the saving, but they have this facility in credit account. Overdraft facilities are given in case of current accounts only. So what is overdraft facility? So overdraft facility means the customer can withdraw the money which is I mean the amount more than what he is having in his account. Say for instance, if I am a customer, I'm my account is some business account. So what happens, in my bank account, say I have like 200,000. Okay, so what happens, I can even take money more than the amount in the bank, like 220, okay, 1,000. So what happens, in other words, if my account is having only 2 lakhs, okay, I can take 2 lakhs 20,000. So that is a 20,000 rupees extra than what is in my account. So that is called overdraft. This overdraft facility is only available to the customers who are having current account. And again, there are some, what is a hard fast rules. and then basically it is given to the customer, I mean, who maintain I mean a good what is say good account with the company, having a good name in sense they have proper dealings and more dealings with the bank. The loans allowed by bank to the customers are not given in form of cash but via current accounts. Okay, so thus current accounts earn interest on all types of advances allowed by the banker. So the loan allowed by the banker, that is given by the banker to the customer, are not given in the form of cash but they give through the current accounts. Then we discuss about saving and current account. Then we go to fixed deposits. Fixed deposits refer to the deposit repayable after the expiry of certain period, which generally varies from 3 months to 5 years. So if someone who are having some lump money, okay, they are looking for good investment and without any risk of losing the investment with good percentage of interest, the best option is to go for a fixed deposit. So fixed deposit is the money where the customer will deposit in a lump sum money. They deposit in a bank account, and they can only, I mean, the duration of the deposit may vary from 3 months to 5 years. Here they can only withdraw the money after the expiry of the duration. The fixing of the period enables a banker to invest money without having to keep a reserve, and hence very popular with the banker. So the rate of interest, so they incur I mean for the deposit some interest. This interest, fixed department interest, usually, I mean, it will be more than the saving deposits or saving account. So what happens again? There are other these things like a senior citizens, the percentage of interest will be higher. So rate of interest, higher rates of interest are offered on fixed deposit as the depositor parts with the liquidity for a certain period. The longer the period, the higher will be the rate of interest. So when we are looking for a really a good investment with no risk of losing the money, then as I mentioned, it's a fixed deposit is a good option. So depending upon the duration, that's a more the duration, like 3 years, 5 years, higher the percentage of fixed deposit, and that's one option. And second one, you'll get more interest on fixed deposit if you deposit the money under a senior citizen, so maybe 1 or 2% or 1% may be higher than what they given for the a normal customer. So fixed department for senior citizens, special FD schemes have been formulated by RBI for senior citizens in whom they are offered higher and a fixed rate of interest. So that's a privilege given to the senior citizen. So if someone investment want to look or want to gain higher interest, they can deposit the FD under the seniors in their home. FD in joint names. So fixed deposits can also be opened in joint names of two or more peons, which are payable to either or survivor in accordance with the terms of acknowledgement. The problem faced by the banker before date of maturity are, so what happens? You can like a normal saving or a current account, a fixed deposits can also be under two people. Okay, so it can be after the expiry, it can be given to any one of them or both of them. So like that. So the what are the problems the bank face? Okay, before the date of maturity are requests for untimely refund by one of the depositor. So if one of them requests they want to withdraw the money before the expiry of the date, then that is a problem. Loan against FDR by one of the depositor, again, out of two, say one is asking a loan against this deposit, is again that's other issue. Request for duplicate receipt by one of the depositor. Already when we deposit they give one acknowledgement, that's a FD certificate. So the other depositor may also ask for a duplicate certificate. In all these cases, the banker should obtain consent of other depositors. So what happens? The banker has to take the agreement of the other one who is having a fixed one. So before they go for a joint account, so they should ask both of them. Then uh, everything, all the rules and regulations are okay with them. So if they take their consent and their agreement, then what happens? Banker will not face the above discussed problem. So this here you see a customer, a senior citizen. He is a senior citizen in the picture given here. Since he is a senior citizen, the bank manager is saying that based on his relation with the bank. Okay, that's why his account maintenance is good. And then since he is a senior citizen, he is getting a more interest for his FD. So payment before due date. Even though a FD is payable after expiry of defined period, banks allowing encashment even before maturity. In such a case, a certain interest will be charged for the same. Okay, as the name suggests, uh, FD is a fixed deposit for a fixed period of time. As we know, it's vary from like 3 months to 5 years, even 10 years. But if the customer want to withdraw the money, encash the fixed deposit before the date of maturity, then what happens? It is possible, but what happens? The customer will incur some charges. According to the Reserve Bank of India directive, banks should not charge the penalty in case of premature withdrawal for immediate reinvestment in another FD for a longer term than the remaining period of the original contract. So again, there is another clause. If the customer want to withdraw the money, and want to reinvest in the same bank for a higher period or for a higher duration of time, then they are not, the bank is not liable to put any charges for the customers. In other words, they are reinvesting in the bank, that too for for a longer duration. So that is a clause given by RBI, that in that case, okay, of reinvestment, the bank should not charge any penalty to the customers. Overdue deposits. If the receipt is not encashed on the date of maturity, the interest ceases to run from that date. The bank allow interest as per RBI directives if it is renewed. In other words, if the receipt is not encashed on the date of maturity, the interest ceases to run from that date. So what happens if they don't encash after the expiry of the date? So what happens? Uh, they won't get that amount of interest, but after that it will be auto renewed. And during that auto renew time, what will happen? The interest subjected to that particular time, the interest given by RBI, and of course the bank, okay, for that particular duration will be, applicable. In other words, say if I deposit from like 2019 to 2020 October. So October, the particular date, my things, my FD is what you say is expire. So after October 2020, what happens? It can be renewed. It is called auto renewal. But what happens? The rate of interest will definitely vary after that. Say for instance, to 2019 to 2020 October, if my rate of interest for the FD is say 6%, and now from October 2020 to 21, the rate of interest is like 5.5%. So after the renewal date, I will only get the what is the current rate of interest for the FD. Sometimes it may be higher, sometimes less, sometimes it can be the same amount. So that is the rule. So now we will go to recurring account or recurring deposit. Recurring account, in order to inculcate the habit of saving on a regular or a recurring basis, the banks have started various daily, weekly, or monthly deposit schemes in a recent year. So this one here, like unlike a fixed deposit, the customer is not going to deposit a lump sum amount. This is something like a saving. They will be depositing in a small amount. But what happens? This small amount will be a fixed amount. Say if in my salary I could like save 5,000 per month. Okay, so in the recurring account can be like 1 year. So I will be like saving every year 5,000, every month 5,000, 5,000. So this is called a recurring account. In these accounts, the money is generally deposited in monthly installment for a fixed period and is repaid to the depositor along with the interest on maturity. So I will get the money along with the interest after the particular duration is completed or expired. These are referred to as recurring depositor. So this one to promote or what happened to inculcate the habit of regular saving in the household. The period of recurring deposit varies from bank to bank. Again, not only recurring deposit interest and the period duration, it differs from private to public, and even public or private, it varies from one bank to another. Generally, banks open such account ranging from 1 to 10 years. So the duration usually is from 1 to 10 years. So recurring account opening and functioning of the account. The recurring account can be opened by anyone, by a guardian in the name of a minor, and even by a minor, more than one person, jointly or individually. While opening the account, a passbook is provided to the depositor, which is to be presented to the bank at the time of deposits and repayment of the amount. Same like that saving account. Here, a passbook is given to the I mean, given to the customer on opening the account. So what happens every time the money goes into the bank, it can be updated in the passbook, same like the saving account. Installment for each month should be paid before the last working day of that month. So before the last day of the month, the monthly installment need to be paid. Rate of interest according to the directive of RBI, the interest provided by banks on RD must be in accordance with the rate prescribed for various term deposits. The rate of interest is therefore almost equal to that of fixed deposit. So what happens again? The principle behind the interest is directed by the Reserve Bank of India. Okay, so that's all for today. Thank you.